National Bank governor says Ukraine explores shift from US dollar to euro. And Trump suggests 80% tariffs on Chinese goods, proposing reduction from current 145% levies. Welcome to the Economic Bulletin, and we start off with North America, where Statistics Canada has reported that the unemployment rate rose to 6.9% in April, matching the November figure and nearing 1.6 million jobless individuals. This increase is partly attributed to the U.S. President Donald Trump's tariffs on Canadian imports. The employment landscape showed minimal gains, with only 7,400 net jobs added in April, following a loss of 32,600 jobs the previous month. The manufacturing sector was particularly affected, losing 31,000 jobs due to the tariffs. The employment rate fell to 60.8%, a six-month low, while average hourly wage growth remained steady at 3.5%. In Europe, the Italian National Institute of Statistics has reported that the industrial output edged up by 0.1% in March compared to the previous month. This increase fell short of market expectations, which had forecast a 0.5% rebound following a 0.9% drop in February. On a year-on-year basis, industrial output was down 1.8%, marking the 26th consecutive decline. Despite a quarterly increase of 0.4% in the January-March period, the first rise since the second quarter of 2022, analysts remain cautious about the sustainability of this momentum. Germany's new chancellor has stated that Europe supports President Donald Trump's plan for a 30-day ceasefire between Russia and Ukraine, with both the European Union and the United States prepared to heighten sanctions pressure on Moscow if it does not take peace talks seriously. He emphasized that the European Union and the United States would continue to support Ukraine, potentially increasing their assistance if necessary. However, he noted that Germany opposes joint European Union debt to finance defense spending.
Thank you. Please, thank you. Please.
Governor of the National Bank of Ukraine has stated Ukraine is exploring a shift away from the US dollar, potentially aligning its currency more closely with the euro. He emphasized that the complexity of this transition, marking the first direct comments from a Ukrainian official on the matter. He added that strengthening of the European Union's role in ensuring our defense capabilities, greater volatility in global markets, and the probability of global trade fragmentations are all reasons Ukraine is considering the euro over the dollar. Now, ladies and gentlemen, the world shift to the euros as the dollar stumbles.
The US dollar, long considered the world's ultimate safe haven, is under pressure. The dollar index has fallen over 8% this year, hitting a three-year low, while bond yields surge in an unusual pattern. Investors, spooked by Trump's controversial economic policies, appear to be pulling out of US assets. From renewed attacks on the Fed to a ballooning $1.8 trillion deficit, the signs are troubling. Confidence in the U.S. economy is weakening, and the credibility of American monetary policy is being questioned. Even Trump's decision to pause new tariffs may reflect concerns over debt service costs. Meanwhile, the euro is regaining ground. The European Union is positioning itself as a stable alternative, boosted by Germany's €1 trillion debt plan. and the European Central Bank's ongoing bond support. Ukraine's symbolic move toward adopting the euro underscores the currency's growing influence. Still, the Eurozone faces structural challenges, from fragmented capital markets to persistent fiscal gaps between member states. While a global shift away from the dollar remains unlikely in the short term, the erosion of U.S. credibility is prompting diversification. The dollar's dominance isn't ending, but for the first time in decades, the world is seriously weighing other options.
Moving to Asia, where official data has revealed that China's total goods imports and exports expanded by 5.6% year-on-year in April, reaching 3.84 trillion yuan. In April, exports rose 9.3% to 2.27 trillion yuan, while imports increased by 0.8% to 1.57 trillion yuan. For the first 4 months of the year, total goods trade grew 2.4% to 14.14 trillion yuan, with exports up 7.5% to 8.39 trillion yuan and imports down 4.2% to 5.75 trillion yuan. The China Federation of Logistics and Purchasing has noted that the country's e-commerce logistics sector demonstrated robust growth in April, driven by policies aimed at stabilizing economic growth and boosting domestic demand. The e-commerce logistics index rose to 111.1 points, an increase of 1.1 points from March. Key sub-indices also showed positive trends, with the total e-commerce logistics business volume index reaching 129.4 points, up 2.6 points from the previous month. The rural e-commerce logistics business volume index increased to 129 points, reflecting a 3.3-point rise, with all regions experiencing growth, particularly in the eastern area. The Japanese Labor Ministry reported that real wages fell 2.1% year-on-year in March, marking the third consecutive month of decline due to persistent inflation. In contrast, consumer spending rose 2.1%, indicating some economic resilience. The consumer inflation rate, which includes fresh food prices, rose 4.2% in March, slightly easing from February's 4.3% increase. While regular pay increased by 1.3%, overtime pay declined by 1.5%, suggesting a potential slowdown in business activity. Total average cash earnings rose 2.1% to 308,572 yen, although this was lower than the previous month. Household spending showed positive signs, rising 0.4% month-on-month, driven by increased spending on utilities and entertainment, although consumers are still cutting back on food purchases due to higher prices. The Department of Statistics Malaysia has reported that Malaysia's unemployment rate for the first quarter decreased 0.1 percentage points to 3.1% compared to the previous quarter. It said that the number of unemployed persons during the quarter showed a quarter-on-quarter decline of 2.3% to 526,300 persons. Meanwhile, the labor force in the first quarter experienced a quarter-on-quarter growth of 0.8% to 17.23 million persons. The labor force participation rate rose 0.1 percentage points to reach 70.7% during the quarter, compared to 70.6% in the previous quarter. And joining us from London is Tor Edrifeai, Director of the Quorum Center for Strategic Studies, to discuss the latest developments in exploring a shift away from the US dollar. Welcome, sir. Thank you so much for joining us on the Economic Bulletin. And first off, with Ukraine moving closer to adopting the euro, what are the implications of Ukraine's potential euro adoption for the stability and the integration of the eurozone?
This actually has been long expected because, as you know, Ukraine is seeking to apply for EU membership and looking for closer ties with the EU. So this is not out of the ordinary. This was expected, and surprisingly, I would have hoped to see this even sooner. So what does this mean? It doesn't mean that that Ukraine is adopting the euro or moving away from the dollar completely. It just means that when they deal in trade, they'll be using the euro over the dollar.
Hmm. Now, building on this, how might Ukraine's potential euro adoption affect the euro's strength and credibility as well as a reserve currency, especially in light of declining confidence in the US dollar?
Uh, Initially, of course, or economically speaking, increased use in the euro obviously gives more support for the euro. So, from a euro perspective, this is positive news. For Ukraine, however, the primary reason for Ukraine to do this, like I said, is they are trying to seek EU membership, which I think actually is going to be a very long process. I don't think it's going to be easy. And as it stands right now, with an ongoing war, I think it's impossible until the war ends.
Hmm. Now, sir, could Ukraine's shift towards the euro accelerate the European Union's push for deeper financial integration, such as a unified capital market or fiscal policy?
I see this far on the horizon. I don't see it happening immediately. I would say for the next year or two, and actually beginning from when the war ends, this is when I see more or increased development and Euro cooperation between EU member states as well as Ukraine.
Now, in the context of growing skepticism around the dollar, what alternative currencies or blocks could realistically gain traction as global reserve currencies in the medium term?
The most prominent one, obviously, is the euro. It's the second most widely used currency in the world. Other nations, and frankly speaking, I don't think other nations want the responsibility to be the reserve currency because, as you have seen in the US experience, it comes with additional burdens on the US dollar. Not only is it up to the Federal Reserve to manage and the Treasury to manage the dollar domestically, but they also have to keep in mind that internationally, there are more dollars circulating than domestically. So they had to balance out the needs of the international community as well as the needs of the domestic community. And they do not always align, and this creates friction. So for a currency to seek to be the dominant currency or global currency, I don't see this happening anytime soon. Like I said, the only one that's available now would probably be the euro. I don't see the Chinese yuan. I don't see any other currency that is actively looking to take control of this or take over from the dollar.
Now, assessing the euro as a currency, how serious is the euro's bid to become a stronger global reserve currency, and what institutional or structural changes would be necessary to challenge the dollar's dominance?
Without a doubt, the euro from its inception is trying to get as many members as possible. As we know, I mean, there are over 27 member euro countries or eurozone countries. However, not all of them are using the euro. So the first step would be to have them use the euro. And of course, any other country that would like to adopt the euro or be part of this trade bloc will be positive for the euro. What does this mean in the short term? And I think you also mentioned the integration of capital markets. Eurozone countries, we already see this. However, countries that are not Euro, that are in the euro or EU, sorry, but not using the euro, this is an opportunity for them to also be more closely integrated. Countries such as Ukraine that are applying or in the early stages, I think this is far off.
Now, Sarah, with the investors beginning to diversify away from US assets, could the euro realistically challenge the dollar's reserve status in the near future?
Uh, I think it could offer some challenges in the near future. And there's a misconception here on currency taking over or becoming a dominant currency. In order to become a dominant currency or a currency of choice, they must have number one, deep capital markets and deep liquidity, especially in the treasury and the debt market. So the deepest and largest debt market in the world and treasury market in the world is the U.S. market, and this also gives support for the U.S. dollar. The
Hmm.
euro, of course, they have euro-denominated debt, and they have a very vibrant and active debt market. So yes, I see the euro offering a strong challenge to the dollar. I don't see any other country with a deep enough and liquid enough debt market to be able to challenge the euro or the dollar.
Now, also given the ballooning US deficit and rising debt servicing costs, what long term impacts might this have on the US economy and the dollar's global role?
As we see, and as we saw recently from the beginning of this year, the dollar has declined against the major currencies, even though I would say over the past 3 weeks we've seen kind of a resurgence in the dollar, but still it's lower than it was at the beginning of this year. And of course, there are a lot of things that take into play that would affect this. Number one is how long are these tariff wars going to last and trade wars? The longer they last, the more pressure it is on the dollar. And I see this as a negative for the dollar because, of course, capital markets and investors want to see smooth operating financial markets, smooth operating trade. And I think, this will give more support for the dollar. However, given the current climate, I see higher fluctuations and volatility in this market. And I think the pressure is on the dollar to the weak side. And of course, whenever we see a weaker dollar, we see more pressure on, and as we see today, talk of, is there going to be a currency replacing the dollar? Is the dollar going to fall out of the dominant spot anytime soon? So of course, it's in America's best interest to have a stable dollar and of course a relatively strong dollar.
Now, sir, looking ahead, what economic indicators or policy decisions should investors closely monitor to assess whether confidence in the dollar will rebound or continue to erode?
Number one right now, especially given the current climate, is resolution to the trade wars and the tariff wars. And as we saw yesterday, the UK has come to an agreement with the US. This is the first step. This is the first major agreement. And as we see more and more of these agreements, I think we'll see more calm come to markets, and I think there'll be some stability, and we'll see, I guess, more investor confidence in the dollar. But until that happens, and of course, there's always a question mark. If the trade wars are resolved, is there going to be something else that comes up? With the new administration in Washington, D.C., you never know. There could be something else after the trade wars. But of course, this is always on investors' concern and investors' mind.
From London, that was the director of Qnews Center for Strategic Studies, Tariq El-Rifai. Thank you so much for your insights and for joining us here on the Economic Bulletin. Now back to our news. Russian President Vladimir Putin has stated that trade between Egypt and Russia increased by 30% last year. Putin highlighted Egypt as Russia's most important trading partner in Africa. He noted the relationship between the two nations is progressing successfully and emphasized that Cairo and Moscow's collaboration is based on strategic cooperation. Egyptian President Abdel Fattah el-Sisi has stated that his presence in Moscow underscores the strategic cooperation between the two countries. That comes as President el-Sisi expressed gratitude to his Russian counterpart, Vladimir Putin, for his hospitality and extended congratulations to the Russian people on Victory Day.
Donald Trump is his name, he's there to stay.
As unlikely, impossible, is now reality.
America powerful. We will win, win, win. And we will make America great again. We will very quickly make America great again.
Goldman Sachs and the U.S. Federal Reserve have cautioned that President Trump's tariffs could lead to significant inflation. Goldman Sachs predicts the core consumer price index may reach 3.8% by December, with second-hand car prices rising 8.3% and household appliances 7.8%. Fed Chairman Jerome Powell noted the impact of these tariffs is highly uncertain, warning of potential inflation, slower growth, and higher unemployment. Goldman Sachs has increased the recession likelihood to 35% within the next year, estimating Trump's policies could reduce GDP growth by 1.2%. Both organizations stress the importance of monitoring the tariffs' effects on consumer purchasing power and economic stability. The Bank of Canada has warned that a prolonged trade war could increase risks to Canadian financial stability, impacting banks and making it harder for households and businesses to manage debt. The bank noted that while the financial system remains resilient, ongoing tariffs from the US and Canada could have negative effects if the conflict continues. The report also pointed to risks from hedge funds increasingly exposed to Government of Canada bonds, which could threaten the bond market during stressful periods. While overall household debt has decreased and business insolvencies have fallen, vulnerabilities remain, especially for those with high leverage. Moody's Ratings has reported that banks in sub-Saharan Africa will not be directly affected by U.S. import tariffs. However, second-round effects could still pose challenges. These effects may include higher funding costs and repercussions from a potential economic slowdown in China, a key export market for the region's commodity exporters. Moody's VP Senior highlighted that a slowdown in China could lead to decreased demand, impacting export volumes and prices for commodities. This, in turn, may reduce trade finance fees for banks, making new lending more difficult. President Donald Trump has stated that 80% tariffs on Chinese goods seems right, marking his first specific suggestion for a potential reduction from the current 145% levies imposed on China. This comment comes ahead of weekend talks in Switzerland aimed at addressing ongoing trade disputes between the U.S. and China. In a post on Truth Social, Trump emphasized the need for China to open its market to U.S. goods, asserting that closed markets don't work anymore. His suggestion of an 80% tariff represents a notable shift, as he had previously indicated that he expected the punitive rates to decrease, but had not provided a specific figure until now. British Prime Minister Keir Starmer announced that tariff cuts outlined in a new trade deal with the U.S. will take effect as soon as possible. The deal will reduce U.S. tariffs on British steel and aluminium to zero and cut tariffs on United Kingdom cars from 27.5% to 10% for up to 100,000 vehicles. In return, the U.S. will gain better access to the U.K. market for beef and other agricultural products. Starmer emphasized the importance of this deal for protecting British businesses and jobs. Despite the positive developments, the U.S. will maintain a 10% baseline tariff on most goods from the United Kingdom, which has raised concerns among some British lawmakers.
Provide vital assurances for our life sciences sector, so important to our economy, and grant unprecedented.
President Donald Trump renewed his criticism of Federal Reserve Chair Jeremy Powell, urging him to lower interest rates, which he claimed would act like jet fuel for the economy. Trump reflected his frustration with the Fed's decision to maintain short-term borrowing costs in the 4.25% to 4.50% range since December.
If the chairman of the Fed, Jerome, if he would lower interest rates like China did, like I think UK did, but like numerous other countries have done, it's like jet fuel. It would be great. But he doesn't want to do it. I think he doesn't want to do it. Probably he's not in love with me. I think that's right. It's sort of a crazy reason, but that's the way life is. Anybody in his position would be like, it would be like jet fuel. But even without that, we're doing well.
Bitcoin was trading at over $103,000 on Friday, reaching its highest level since January. The cryptocurrency rose to $103,909.17, buoyed by improved market sentiment and closing in on its all-time high of $109,071.86 from January 20th. In markets, stocks wavered on Friday after President Trump hinted more trade deals are coming while floating a cut to U.S. tariffs on Chinese imports ahead of highly anticipated talks between the two countries this weekend. In the U.S., S&P 500 futures dipped 0.11%. Futures tied to the Dow Jones Industrial Average were down 0.27%, and Nasdaq 100 futures declined 0.15%. In Europe, United Kingdom FTSE 100 was up 0.22%, Germany's DAX increased 0.57%, and France CAC 40 rise 0.63%. In Asia, Shanghai Composite Index declined 0.30%, while the Hang Seng in Hong Kong was up 0.40%. Japan's Nikkei 225 hiked 1.56%. Oil prices rose on Friday, poised for a weekly gain as trade tensions between top oil consumers, China and the United States, showed signs of easing. Brent crude rose by 1.3% to $63.68 a barrel. U.S. West Texas Intermediate crude was up about 1.5% at $60.79. Both benchmarks were on track to rise more than 4% for the week. Gold rose over 1% on Friday as the dollar ticked lower, while the market digested recent tariff remarks from U.S. President Donald Trump ahead of a weekend meeting between the U.S. and China. Spot gold was up 0.8% to $3,332.88 an ounce and gained nearly 3% so far this week. Bullion, known as a hedge against geopolitical and economic uncertainties, has risen more than 27% since the start of the year. U.S. gold futures were up 1% to $3,338.10. That brings us to the end of our economic bulletin. Here's what we've been covering. Unemployment rate in Canada rises to 6.9% in April. National Bank governor says Ukraine explores shift from US dollar to euro. And Trump suggests 80% tariffs on Chinese goods, proposing reduction from current 145% levies. This concludes our economic bulletin. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at Q News EG to stay informed. Thank you for watching and stay tuned for more updates on Q News.